Hello everyone, good evening and welcome to today's session. So today we are going to start chapter number 9. You might be wondering about what we discussed last in chapter number 8. Basically, we discussed about the base structure of the chapter number 8, like what is the special purpose framework, the understanding, a background about chapter number 8. Now we will continue chapter number 8 after completing 9, 10, 11 and rest of the chapters, because that lecture was to provide you the base understanding about chapter number 8. Chapter number 8 will be covered later on again in very much detail. We will discuss about the related standards SA8 and 8 series. Okay, so in last lecture I provided you a base understanding of chapter number 8. Now we will move to chapter number 9. Okay, we will proceed with the chapter number 9 and we'll continue like in that way. Okay, so as we discussed in chapter number 8 also, that we were talking about special standards SA8 and 8 series. Now here in chapter number 9, which is related services, we will be again talking about special type of standards, which is SRS. Now what is SRS? SRS basically talks about service standard on related services. Okay, so when I talk about SRS, it is nothing but standard on related services. Okay, this is your SRS, which is chapter number 9. Now, how many SRS are there? Basically, we will be covering two SRS over here, one 4400 and one 4410. SRS 4400, which is basically or predominantly on agreed upon procedures. We will understand, don't worry. We will understand in detail what is agreed upon procedures, what is 4400's requirement, 4410's requirement in detail. Don't worry, we will get a good understanding of that. Okay, but as of now, just keep in mind that there are two SRS, 4400 and 4410. 4400 predominantly talks about agreed upon procedures, and 4410, that is 4410, talks about compilation engagements. Okay, so we will understand what is agreed upon procedures, we will understand what is related services, we will understand what is compilation engagement and what these standards require. That will be covered under your chapter number 9, that is related services. Clear till now, till here? Any doubt? Any doubt? Okay. If no doubt, then see, as I told you, there will be two specific standards that we will be covering, SRS 4400 and 4410. SRS 4400, now which talks about, we will start with first 4400. Okay, now what is 4400? 4400 talks about that, okay, when you are going to perform related services with respect to agreed upon procedures. Now here we need to understand two important things. One, what is a related service? What are related services? Okay, and number two, what are agreed upon procedures? Okay, now when I talk about assurance engagement, what is an assurance engagement? Can anyone explain me what is an assurance engagement? We have dealt with an assurance engagement multiple times. Now can anyone tell me what is an assurance engagement? Anyone? What is an assurance engagement? If you have to define assurance engagement, what is that? No one? Okay, no issues. So, okay, Mancha, very good. Yes, to enhance the confidence of stakeholders, absolutely correct. Now, when I talk about assurance engagement, or let's say I talk about an audit, okay, what is an audit? In audit, the auditor express an opinion. Let's say we'll take an example of the audit. Audit example. Now, if I have to define audit, okay, audit is a process wherein is an engagement, auditing engagement, where auditor expresses a conclusion, a opinion. Okay. Now he expresses an opinion which is designed, okay, to enhance the degree of confidence. The degree of confidence of the intended users, okay, uh, of the intended users. Now, when auditor issues audit opinion, when he issues an audit opinion, that audit opinion is designed to enhance the degree of confidence. Like whosoever will be the stakeholder, his confidence should increase in the underlying subject matter. Means underlying subject matter is the financial statement. So his confidence should increase in the financial statement that, okay, this is the audited financial statement. Now I can rely upon this financial statement. Means his degree of confidence has increased, has enhanced. Okay. So the enhancement of the degree of confidence of the intended users about the outcome of evaluation or measurement of subject matter, about the outcome of evaluation of the subject matter against criteria. Now, criteria is nothing but your financial reporting framework, applicable financial reporting framework. Okay, so this is an overall audit engagement, basically, where I issue an opinion as an auditor to enhance a degree of confidence in the financial statement, which is a subject matter. Now, I evaluate the subject matter against the criteria that's the applicable financial reporting framework. Very good. That is your assurance engagement. But then what is the related service? Now, if I talk about the related service, if I remove the component of assurance engagement, if I remove the component of assurance from this engagement, it will become your related service. Okay. For example, in related services, okay, in related service, I do not issue any assurance. There are some differences, okay, there are some differences, but in related services, I do not issue any assurance. Instead, instead of issuing an assurance report, an opinion, I issue a conclusion. Instead of giving an opinion, I give a conclusion on the factual findings or on whatever engagement I am doing. Okay. Now, again, if I have to reword this, so what I'll do is, I'll write it for you. Okay. Auditor express an opinion. Now, there is no auditor. It will become practitioner. Okay. Practitioner expresses, okay, or issues or an opinion. Instead of opinion, I issue a conclusion, which is designed to enhance the degree of confidence. No, it is not designed to increase the degree of confidence. Rather, it is to report factual finding. Instead of, I say, designed to enhance the degree of confidence, I will say it is designed to report of factual findings. Okay, whatever it is there, I will report that factual finding. Now, factual finding to the intended users. Now, in our case, intended users can be the one who are appointing us, not necessarily the general members of the company, shareholders of the company. No, it can be management also. Okay. So here it can be various other stakeholders, various, intended users in our case. Now, here I talk about outcome of the evaluation of the subject matter against the criteria. Answer is no. Here, instead of talking about the outcome of the subject matter, I perform specified procedures on specified subject matter. Now, this subject matter is a specified subject matter. Specified subject matter, any specific item, accounts or financial statement, whatever. And instead of talking about the evaluation, I talk about specified procedures, predefined procedures. Okay. Outcome of specified procedures of the specified subject matter, or on the specified subject matter rather, means when you perform procedures, your target is not to issue any assurance, but your target is to perform procedures and to report whatever actual it is that will fall under the purview of related services, and that is precisely known as agreed upon procedures. So when you take an engagement under which there is no assurance element, okay, for example, preparation of tax services, consulting or advising the client on tax consulting, okay, preparation of GST returns, whatever you name it, where there is no assurance involved. In that case, if you perform those kind of procedures that are known as related services. Now, these related services basically can be an agreed upon procedure or a compilation engagement. Okay. So when I say that related services it is an engagement without any assurance element, without any assurance reporting, means I'm not going to report, I'm not going to issue any kind of opinion, any kind of assurance, be it reasonable, be it absolute or limited, not at all, no assurance involved. Rather, I am performing the procedures which are agreed with the client, which may be whatever it can be. Let's say, for example, client asked me to do, simple mathematical accuracy calculations or check. Fine, I'll do it. Agreed upon procedures, because I'm not issuing any opinion in that. I'm not issuing any assurance in that. There can be related services or agreed upon procedures on non-financial information. So an agreed upon procedure is a kind of a procedure which can be of audit nature, which cannot be of any other nature. But at the end, you are only reporting factual findings. That is what it is. Like, okay, someone asked you to perform, okay, like management came to you and asked you to perform, please check whether the balance of last year has been carried forwarded appropriately in the current year. You check the opening closing. That is an agreed upon procedure, and at the end you will say to management, either this is carry forwarded appropriately or this is not carry forwarded appropriately. I have not performed any audit on the numbers, whether the numbers are correct or not. I have not performed any of the audit, like whether the list that you have given to me of the accounts to check the carry forward, to check whether the balance has been carry forwarded appropriately or not, or whether the balance has been brought forwarded appropriately or not, whether that list is complete or not. I'm not talking about completeness, accuracy of that particular data. I'm just talking about whatever procedures you ask me to do, I'm doing it, and this is the outcome of that procedure. Are you getting the point? So, agreed upon procedures basically talks about that whatever procedures is maybe, it, at the end you report a factual finding. It can be a specified subject matter, specified elements, accounts, item of financial statement, non-financial information, whatever. Clear? Any doubt with respect to this one? Any doubt with respect to related services or agreed upon procedures? Any doubt, guys? Very important to understand. Yes.
Sir, जैसा कि you have told that uh, the auditor will not express the opinion and he will provide a conclusion. And so, can we include that when an auditor provide any certificate asked by the client, that also can be part of this engagement related services?
No, okay, I'll tell you. Now, what happens is whenever in a certificate, the word comes that true and fair in all material respect. So there are, see, majority of the certificates, the format of the certificate is already prescribed by the law. In majority of the certificates, the format is prescribed by the law.
Yes, sir.
Now, if you see those formats specifically ask you to report that whether the information contained in this certificate is true or correct, is true or fair, or in all material respect is correct, or whatever. You know, the wordings are in such a way that depicts already a kind of a assurance. So I cannot say those certificate being agreed upon procedures. The report on the agreed upon procedure, or I would not call a certificate when it comes to SRS. I would call a report. Okay, the
Yes.
report which is issued under SRS is altogether different, and it does not contain anything like, okay, uh, for example, this is, you know, in all material respect, true and fair, true and correct. These words are not at all there. I'll show you an example. Don't worry. I'll show you one example of the agreed upon procedure report so that you guys can understand in much more detail like what is an agreed upon procedure.
Okay, sir.
Any further doubt, guys? Any further doubt? No? Okay. If no further doubts, let's proceed to the study material and let's have a, you know, go through simultaneously. We will be going through the study material. Yes, Mancha, very good. Certificate can be of absolute assurance also, but when I talk about agreed upon procedures, there is no assurance involved. Okay, so let's come to the page number 9.3 first. We will go through the study material. Okay, chapter number 9. Now, if you see here again, here the definition of assurance engagement is provided that we discussed. Like, what is an assurance engagement? Okay, means an engagement where the practitioner express a conclusion to enhance the degree of confidence of the intended users other than the responsible party. Okay, and outcome of the evaluation of subject matter against the criteria, that whatever we discussed, same is here, same thing is written over here. Okay, and when I talk about and related service, when I talk about a related service, basically it is not the assurance engagement, it is other than the assurance engagement. Means other performed engagement that do not meet the definition of assurance engagement. For example, preparation of tax returns where no conclusion conveying assurance is issued or expressed. Consulting or advising engagement such as management or tax consulting. Engagement covered by SRS such as agreed upon procedures. Engagement for compilation of financial and other information. So these particular type of engagement are known as the related services. Engagement in nature of related services, which are other than assurance engagement. Are you getting the point? Which are other than assurance engagement. Now, in this case, in case of a, let's say, like, assurance engagement, I issue an opinion, but here, no opinion, not at all. As I said, and related service engagement can be of preparation of some documents, tax returns, can be advisory, and can be agreed upon procedures. Now, what is an agreed upon procedures that we just now discussed, that where you perform specified procedures, okay, where you perform specified procedures on specified subject matter, and you report about the factual findings, whatever it may be, factual findings. In that case, that is an agreed upon procedure. For example, in case of an audit, you say that, okay, this financial statement appears to be true and fair. But when it comes to an agreed upon procedures report, I do not say this is good or this is bad. I say, let's say, for example, management asked me to calculate a particular ratio, and management asked me to issue a report for calculating, let's say, a particular ratio for last 5 years. Okay, so let's say engagement was with respect to calculation of 5 different ratios for last 3 years. For the ratios, management gave me the data. Okay, so data was provided by management. In this case, I issued a report on ratios for last 3 years. Now tell me one thing, this report where I have issued, okay, ratios, is an assurance report or a non-assurance report? Is an assurance engagement or a non-assurance engagement? Come on, guys. Come on, quickly. Yes, Mansha. Very good. Come on, guys. Whether this is an assurance engagement or not an assurance engagement, non-assurance engagement. I need with reason. See, there you will get an understanding. If you can tell me the reason, there you will able to understand whether this is what is in related services. No? Okay. No issues. I'll tell you. Now here, I am not issuing any opinion. Non-assurance engagement. Very good. Yes, Jenny. Reason, I'll tell you why. Okay. Reason, because Here I'm just issuing in ratios. I'm issuing a number, okay, in my report. Am I saying this is a good ratio? No. Am I saying this is a bad ratio? No. Am I saying this is meeting the target? No. Am I saying that, okay, the data which was provided for the ratios is complete or accurate? Am I performing any such procedures? No. I am not comparing the outcome of the ratios with any subject matter, any criteria. I'm not comparing with any of the criteria. Okay, this should be the ratio. Like, for example, current asset ratio 2:1. The company is here, so this is this kind of thing. We have verified the data. We have checked the accuracy of the data and all that stuff. No, I am not doing any such thing. I am just calculating the ratio based on the data provided by the management. That's it. In that case, there is no assurance engagement involved. There is no assurance element is involved. That's why it will become agreed upon procedures. The reason, because this particular calculation of 5 different ratios for the last 3 years is nothing but the agreed upon procedure. The procedure that I will perform, and that is agreed with the management or whomsoever it is there who has appointed me. So it has been agreed with them. Clear? That is the difference between your assurance engagement and agreed upon procedures. And SRS 4400 is the standard where, or you need to apply when you are performing an agreed upon procedure engagement. So SRS 4400, that is engagement to perform agreed upon procedures regarding financial information. If that is the case, then this particular standard will come in picture. Clear? Any doubt? Okay. If no further doubts, let's proceed then. Now, when I talk about agreed upon procedures, when I talk about a scenario where I am required to perform a procedure, okay, on report on actual factual findings, I have to use certain terminology. See, I cannot say this is an opinion, first of all. No. I cannot say this is a certificate. I cannot say this is an, a certificate, opinion, or no. I cannot use these terminologies. So what I'll do is I'll instead use a report on factual findings or report on whatever procedure it is. It is not an opinion. It can be called as a conclusion or outcome, basically. I can call this an outcome rather than calling this as a conclusion or opinion. Okay. Now, again, as I said, no assurance is involved, and then I will keep saying multiple times, and that is the thing I need to provide that particular thing, that this like no assurance is involved, okay, in my report also. So at multiple places I have to specify that this is not an assurance engagement. Now, when I talk about, see, difference, we understood the difference like assurance, non-assurance engagement. Okay. And we will see the terminology also, like what is the terminology? Okay. What is the purpose of a report under SRS 4400? Okay. And how we issue it. Okay. See, Mancha, basically we have to use the term practitioner in case of SRS 4400, not the auditor. We are not auditing a particular engagement. Okay. We are not auditing an engagement. So that's why we have to use the terminology practitioner, okay, instead of your term, what you say, auditor. So you will see that, okay, that we are using the term practitioner, auditor interchangeably, but usually it is not the auditor, it is the practitioner here. Yes, yes, the term auditor is used. Reason because at the end we are performing some procedures over here. Okay, we are performing the procedures, but when it involves, let's say, related services, okay, it is the person who is performing the related services. To denote that person, the term auditor has been used. Okay, so you can interchangeably use as practitioner also, but when if you see the term, if you see the standard also itself, it also clarifies the term auditor does not mean that the person who has audited the financial statement. No, it means, or it refers to a person who is going to perform these procedures. Because I'll tell you, because when I talk about agreed upon procedures, okay, when I talk about agreed upon procedures, and when I talk about specifically SRS 4400, here the job, or here the engagement is that auditor is going, or some the person, the practitioner is going to perform procedures which are in of audit nature. Okay, which are of audit nature. Okay, and based on that he is going to report factual findings. That's why the term auditor is being used. Are you getting the point? So SRS 4400, when I talk about agreed upon procedures, as of now we are only talking about financial information, agreed upon procedures on financial information. And when I talk about these agreed upon procedures, as of now, I'm talking about which are in nature of audit procedures. Now, you might have a question that what about other procedures which are not in nature of audit procedures, or what about non-financial information? Yes, that is also fall past of your related services, but that will not fall under the purview of SRH 4400. So that is a related service. For example, like this way, consulting or advising, preparation of tax returns. This does not fall under the purview of SRS 4400. So I do not issue a report every time when I prepare a tax return. Answer is no. I do not issue a report with each and every tax return under SRS 4400. That's why I need to understand what is covered by 4400, what is covered by other SRS, and what is the related service. Related service can be a much larger one. When it comes to the agreed upon procedure of 4400, it's a smaller in part of the related service. So to demonstrate, let's say this whole is your related service. Now, under this, a very small part is your SRS 4400 engagement. Okay, so very small part is your SRS 4400 engagement. There are other engagement also which are called as a related services. Clear? Any doubt? And any which ways, let's say for example, this is a non-assurance engagement. Okay. If I am an auditor, now section 144 of the Companies Act is also there to bar me or to restrict me for providing non-assurance engagement. So that's why, the word auditor may be used throughout the particular, chapter, but that is to demonstrate the person who is performing the services, not to demonstrate the person has to be an auditor. Okay. So in literal terms, do not interpret that the person has to be an auditor in order to perform the SRS. No, answer is no. Any further doubts? Any further doubt, guys? Okay. Again and again, I will say that no assurance is involved or is provided in the report. Okay. Rather, the users of the report have to draw their own conclusions from the work that is performed by the auditor. And you have a good, difference between audit versus agreed upon procedure over here. I would recommend everyone to read it because that is very important. Whatever we have discussed is there, like audit and agreed upon procedures, like report on factual findings. Okay, no assurance is given that way. So whatever we have discussed in now is reported over here or written over here. Okay, now see, this being a non-assurance engagement is still an engagement. Okay, this is a non-assurance engagement. I agree, but still this is an engagement. So if this is an engagement, then there might be something that the auditor should comply with, or the person, I will refer, auditor in this scenario, you can say practitioner, he has to comply with, okay, when it comes to this particular type of engagement. Means there are certain things that the person, the practitioner, the auditor has to comply when he is undertaking this particular engagement, because at the end this is an engagement. Okay, what are those things? I'll show you. So basically, when an practitioner and auditor is undertaking agreed upon procedures, he has to comply with general principles, okay, which are there for the agreed upon procedures. So auditor to comply with general principles in case of agreed upon procedures, we call them AUP, agreed upon procedures. Okay, but in exam, please do not write AUP. You have to mention agreed upon procedures. Now, what are these general principles? Now, these general principle means auditor has to comply with code of ethics, irrespective of your type of engagement. You have to comply with the code of ethics, plus principles governing the auditor's professional responsibility. You have to comply with the ethical principles. Now, can anyone tell me which are those ethical principles that we have discussed? Quickly, which are those ethical principles? Can anyone name those ethical principles? No? Come on, guys, quickly. Which are those ethical principles? Yes, very good, Bancha. Yes, Jenny, very good. Yes, very good. So ethical principles like your integrity, your objectivity, professional competency, and due care, then confidentiality, then professional conduct, and technical standards. These are certain principles that the auditor or practitioner has to comply with when they are undertaking this kind of engagement. Okay. Now the question comes is, there is one particular principle which I have not written over here. Can anyone tell me which principle is that which is missing over here? A particular principle which I have not written. Yes. Very good, Mancha. And why I have not written? Can anyone tell me also that one? There is a particular principle that I have not written and the reason why I have not written. If can anyone tell me? No, professional behavior, professional conduct is a professional behavior. That is not a case. Professional conduct, professional behavior that I have written. That's not a case. Yes, very good. Very good, Mancha. Anyone else? One particular principle that I have not written. No, Genie. Competency is there. Professional competency, the third one. I have written professional competency. Yes, Manish, very good. So the particular principle that I have not written is independence. Reason because independence is kind of related to the assurance engagement. Now here this is not an assurance engagement. Understand that. That's why independence is not mandatory. So independence is not mandatory in agreed upon procedures case. It is not mandatory. If auditor has, if the person who is issuing the report, if he's independent, perfectly fine. He can be. It's an add-on. But whether it's a mandatory, answer is no. It is not. Reason because this is not an assurance engagement. This is an engagement to report on the factual findings. Clear with this? Any doubt? Any doubts? So whenever this type of engagement is there, agreed upon procedure, the auditor or the person, the practitioner has to comply with the ethical principles, but independence is not mandatory in that. Okay. Now, as I said, this is an engagement. Again, this is an engagement. So ethical principles were necessary. In the same way, the terms of engagement is also required to be there. So auditor has to define, or the person who is performing this particular engagement, the chartered accountant has to define the terms of engagement. Okay. Now, what could be the terms of engagement here? Terms of engagement basically will talk about one, nature of engagement. What is the nature of engagement, or what is the type of procedures that will be undertaken? Okay. Nature of engagement, or you can say type of procedures. Second, the purpose of procedures. Why these procedures are undertaken? Purpose for the engagement, or why we are undertaking these procedures. What is the purpose at the end? Number three, identification of financial information. Now, can anyone tell me why we are doing this identification? Why we are identifying the financial information in our engagement letter? Can anyone tell me? Why I am identifying financial information in my engagement letter? Anyone? Why I am identifying? No? Okay, no issues. I'll tell you. See, uh, when I talk about agreed upon procedures, okay, now over there, I told you that this is not an assurance engagement. I'm not going to do any, completeness, accuracy check of the data. If I am not doing any completeness or accuracy check of the data, then in that case, I have to identify that particular data in my engagement letter so that I can say, okay, this is the data you have to give me. I'm not going to perform on any procedures on this data. You have to provide me this data, that identification of the financial information, financial data that you will give me, the management or the stakeholders, whosoever, is appointing me. And on that, I will perform the procedures. That's why identification is necessary. Okay, I'll do a identification, and then I will decide, I will specify the nature, timing, and extent of procedures that are performed or that will be performed. And then I will talk about limitations. Limitation on distribution. Very important. I'll come that why we have to do a limitation on distribution. But these are the things that we have to specify in our engagement letter, at least. This is the minimum thing. Minimum. Clear with this? Any doubts? Once this get accepted, once this is agreed with the respective person who is appointing us, okay, once this is agreed with the concerned users, okay, in that case, in that scenario, these procedures are known as agreed upon procedures, because now they are agreed as a part of my engagement letter. Okay, Now that was defining the terms of engagement. Very important. We discussed about comply with the general principles. Now we will talk about planning and performing. Okay. Planning and you can say procedures and evidence. Now tell me one thing. Simple. Can you have a predefined planning for these kind of engagements? Like one planning that can be applicable for each and every engagement? Can you have such kind of things ready? A template, steps, predefined that will be applicable in all the scenario? Yes, no. Can you have predefined steps for the planning or things for the planning of these kind of engagement, like one predefined steps that will be applicable to all? No. Very good, Manish. Yes, we cannot, because each and every engagement will have a different kind of agreed upon procedures. Okay, so the planning and the plan of the work will totally depend upon the procedures that are required to be performed. So plan will depend upon the procedures here. Planning will depend upon procedures. For example, we may need to hire an expert also. So accordingly, we need to plan our procedures. Okay, whatever we have to do, whatever we have to report the factual finding, accordingly we have to plan. So there is no one fit size for each and every agreed upon procedure. No. Then what about the procedures that we can perform? Now, when I say planning will depend upon the procedures, what procedures we are talking about? See, the procedures can be of, a known nature. For example, either I will perform inquiry, either I will perform recomputation, either I will perform observation, either I will perform inspection, or I may perform confirmation. Okay, so these can be the procedures which I can perform, and on the basis of that, I can basically decide my planning. Let's say if I want to perform inquiry and observation, I may choose to perform let's say for example, observation of particular procedure or a particular activity that management is performing. So I have to align with the management's dates. Okay, when you are going to perform that activity, I'm going to observe. Recomputation, I may ask some data. Based on the date, they will provide me the data. I need to perform the recomputation. Confirmation, I will draft the confirmations, I will send out the confirmations, will get the data, and I will report. So again, it depends upon the procedure, and your planning will depend upon these kind of procedures. Clear with this? So your planning will totally depend upon your procedures, and procedures can be inquiry, recomputation, observation, inspection, and confirmation. Any doubt till now? Any doubt? No. Okay. Now let's talk about the study material, we'll go to the study material. Over there, we'll go through the chapter and we'll see whatever we have discussed. See. Now, this was the general principles that we discussed, that the auditor or the person who is performing the procedure has to agree, has to, comply with, which includes integrity, objectivity, professional competency to care, confidentiality, professional conduct, and technical standards. Again, independence is not required for agreed upon procedure because here no assurance is there. Now the question is, can we use SA 300 for the planning? See, you can use the concepts which are enumerated in SA 300. No doubt. You can definitely use those concepts. But in no sense that should be your assurance engagement. Understand that if I use SA 300, okay, I should not call this an assurance engagement, or I should not specify anywhere in my report that I have complied with SA 300, SA 500, or normal essays. No, I have not. I'm not required to do that, or I should not do. So whenever we issue a report, let's say audit report, you specify that you have complied with the standards on auditing. Let's say you are performing agreed upon procedures and you have followed some principles which are there in the standards on auditing. Perfectly fine. You can do that. Okay. Provided that you also comply with SRS 4400. Now, when you use or when you comply with some of the principles which are there in standard on auditing, okay, by complying SRS also, in your report, you should not mention that you are complying with the standards on auditing. No, that you should not do. Clear? Any doubt? Any doubt? No? Okay. Now, we were talking about, the principles, independence, not mandatory, perfectly fine, defining the terms. Okay, we have to define the terms of engagement because at the end, this is an engagement that is specified over here, that the nature of engagement should be there, stated purpose, identification of financial information, nature, timing, and extent of the specified procedures, and limitation on distribution. Then auditor should send this particular letter to the respective person who has appointed us, respective stakeholders, for their agreement. Okay, once agreed, then these will become agreed upon procedures. Okay, planning, as I told you, planning has to be performed based on the procedures that are required to be performed. Okay, and these procedures can be inquiry, recomputation, observation, inspection, obtaining confirmations. Whatever you may decide, whatever you are required to perform, you have to perform them. Very important part now comes is in reporting. Okay, very important part. Reason because now we have to understand how to report when it comes to the agreed upon procedures engagement. Okay, so reporting, very important part. SRS 4400 specifies what are the minimum items that should be there in your report. Minimum items which should be there in your report. Now, these minimum items, like, if you want, you can add more, provided it is not diluting, it is not, changing the minimum items. So you can say this is the minimum items over here. To report, or to have in your report. Now, what are these minimum items? Number one, the title. Unless and until the practitioner, the auditor is independent, you are not required to specify the term independent. Remember, in audit report, we mentioned that independent auditors report. Here, we will not mention the term independent unless and until the practitioner or the auditor has complied with the independence requirement. Although I understand it is not mandatory, but in order to have a title independent, in your title, you have to comply with the requirement. Okay. Then, second is addressee, the person who is appointing to you, not the members, not the shareholders, not any regulatory authority. Whosoever is appointing you will be the addressee. I will show you, Ginny, one example of particular report. Okay, just after this section, so that we can compare the draft report and this particular section, so that it will be more clear to you then. Then you need to specify the financial or non-financial information upon which the agreed upon procedures will be performed. So the information on which you will perform the agreed upon procedures, identification of that particular financial, non-financial information. Then statement that the procedures performed were agreed with the recipient or the person who is appointing you. Okay, very important. Then only I can say this is an agreed upon procedures. Clear? Then a statement that this engagement was performed as per the standard on related service applicable to agreed upon procedures, SRS basically. So this engagement was performed based on SRS. Then identification of the purpose for which the agreed upon procedures were performed. Now the purpose of the engagement, you have to identify that purpose in your report. Listing of specified procedures. So purpose, then listing of specified procedures, what procedures you have performed. Then description of actual findings, whatever findings are there, including details of error, exceptions, whatever you have agreed with them to perform, whether whatever outcome is there, you have to specify that outcome. Okay, very important. A statement that the procedures performed do not constitute either an audit or a review, and no assurances expressed. A statement that if additional procedures would have performed, then other things might have been come to have light that might have been reported. Means that says that, okay, if I would have performed the audit, then other things might have come to my light or come to my attention. For example, let's say if I would have performed procedures like checking the data, accuracy of the data, completeness of the data, then there were chances that misstatement might have come to my attention, which I might have reported to you. If I would have performed a full-fledged audit or a full-fledged review, but I am not performing a full-fledged audit or a review. That's why I am including a statement that, okay, this is not an audit, first of all, not a review. If I would have performed audit or a review, other things might have came to my attention or came to my light that I would have reported to you. Then a statement that the report is restricted to the parties who are appointed to us and should not be circulated for any other purpose, because we never know why. Let's say someone asked you to prepare a report on mathematical accuracy, and then that report is circulated as an audit report. We never know. So a statement to that effect, a statement that the report only relates to the elements, accounts, or items of financial statement or non-financial information which is specified, okay, in that particular report and does not extend to any other thing. Then you have a date, place, and auditor's signature. So this is how the minimum content should look like. Any doubt? Any doubt? No? Okay. If no doubt, then let me share one draft report. So see, this is a draft report that I'm going to share with you for your understanding. Okay. Not a final report, because these type of engagements are not available in public. So report of these kind of engagements is not available in public. That's why I have a draft report. Okay. A dummy report kind of, you can say, so that you can understand how the report is issued. Just give me a minute. Let me open it. So there is one particular, we have a bare text also of the standard. So the bare text of the standard also contains one draft. I'll show you that draft. And then I'll show you another dummy also. Okay. This is one such example of report on factual findings in connection with account receivables. Okay. Now see how it is there. The title is report on factual findings in connection with agreed upon procedures, assignment related to account receivable. Now here to those. So this was the title. See, the word independent is not mentioned. Okay. Now title again, whosoever has appointed us, his name will be there over here. We have performed the procedures agreed with you enumerated below with respect to the account receivables of ABC company as at this particular date set forth in the accompanying schedules. Okay. Our engagement was undertaken in accordance with the SRS, the name of SRS issued by ICAI. The procedures were performed solely to assist you in evaluating the validity of account receivables and as summarized follow. Okay. Again, this particular point. The procedures were performed solely to assist you in evaluating the validity of account receivable and are summarized as follows. That is, we obtain and check the addition of the trial balance of account receivables as a date prepared by the ABC company, and we compare the total to the balance in related to the general ledger account. We compare the attached list of major customers and amount outstanding at this date related to the names and amounts in the trial balance. We obtain customer statement or confirmations from the customer to confirm the balance outstanding. Now see what they are doing here is, one, they are basically doing addition of the trial balance, okay, of account receivables that is prepared by ABC. So there is an addition which is being done. They are comparing to the total balance in related to the general ledger. So sub ledger, general ledger, addition and check they are doing. Second, they have compared major customers, okay, amounts outstanding related to the amounts in the trial balance. So they are again comparing. First one was addition and addition, or you can say kind of reconciliation between sub ledger and general ledger. Second is nothing but compare. Over here, if you see confirm balance outstanding, so they will obtain customer statements, confirmation from customers, okay, and they will confirm the balance. So these were the procedures that they were supposed to perform. Now see the outcome. We have compared such statements, confirmation of the amount referred into clause 2 above, this one over here. For amounts which did not agree, we obtained reconciliations from ABC company. For reconciliations obtained, we identified and listed outstanding invoices, debit notes, outstanding checks, each of which was greater than this much amount. We located, examined such invoice, debit notes subsequently raised, checks subsequently received, and we ascertained that they have been rightly listed as outstanding on the reconciliations. Means they have went and they have checked the underlying data for outstanding. Now over here, if you focus, what they are saying is, we have identified the listed outstanding invoices, identified and listed the outstanding invoices, debit notes, and obtains outstanding checks. Nowhere they are saying that they have audited the invoices, debit note, or checks. They have located and examined such invoices, not the audit. So the word audit is not being used. They are using that they have located and examined such invoices. Are they saying that these invoices are correct? Are they saying that these invoices represent or reflect true and fair view or do not contain any misstatement? No. They do not. They are not commenting on that particular portion. And at the end, they are saying rightly listed as outstanding in the reconciliations. Based on whatever invoices that were given to us, we say that has been rightly listed. So if you see, for amounts which did not agree, we have obtained reconciliation from ABC company. So the data was obtained from the company for the amounts which do not agree. Now, if this would have been audit, the amounts that do not agree, we would have said, okay, this is a misstatement. But here we are not saying this is a misstatement. We are saying to management, okay, management, this is particular difference based on agreed upon procedure, what we should do. Management gave me a data, I verified it, perfectly fine. Okay, I'm sure, I'm done. But I'm not saying the data that has been given by the management is complete or accurate. No, I'm not commenting on that. Then they are reporting their findings. We report our finding below. With respect to item 1, we found the addition to be correct and the total amount to be in agreement based on the data. With item 2, we found the amount compared to be in agreement. Like whatever comparison was done is in agreement. With respect to item number 3, we found there were supplier statement for all such customers. With item respect number 4, we found the amount agreed with respect to items which did not agree. We found the company had prepared reconciliations and that debit note, invoices, outstanding checks were appropriately listed as reconciling item. Okay. So everywhere we are saying, okay, whatever procedures we have performed, this is the outcome. And the, we are saying that the data was given by the company. Now, if you see these 3 paragraphs, very important. Because the above procedures do not constitute either an audit or a review made in accordance with the generally accepted auditing standards in India, we do not express an assurance on the account receivables. Means this is not an audit. No assurance is there. Number 2, had we performed additional procedures like confirmations, okay, like auditing procedures on account receivables, like validating account receivables, auditing account receivables, whatever. Had we performed audit or review of the financial statements like sales, like debit note, credit notes, whatever, with generally accepted auditing standards in India, that is SA, other matters might have come to our attention that would have been reported to you. Means misstatement. If you would have performed audit, then there were chances that you might have identified misstatement. Then you would have reported that misstatement as a qualification. Or other matters could be your EOM paragraph, going concern related, your key audit matters. So all those things might have come to your attention that you might have reported. But here you are not reporting. Our report is solely for the purpose set forth in the first paragraph, that is account receivables of this report, and for your information, and not to be used for any other purpose to be distributed to any other parties. Tomorrow, if company goes and submit this report to the bank and says, okay, no, auditor has, audited the account receivable. See, this is the audited account receivables certificate that has been given by the auditor. So the last paragraph is to provide that, okay, this is not for any other purpose, rather this is agreed upon procedures, the purpose which has been agreed between the appointing authority and the auditor or the practitioner. This report relates only to the accounts and items specified above and does not extend to any financial statement of ABC company taken as a whole. So this is how a report is issued under SRS. Any doubt? Any doubt till now? Any doubt? Come on, guys. Any doubt? Yes, this is just an example. It can be changed as per the requirements, but base thing, the minimum items will remain as it is. So you will not change the minimum items, but rest everything will remain as it is. Okay. If no doubts, so this was your report. Now, again, then once you have issued your report, once you have undertaken the report drafting everything, you have to comply with the documentation requirement for each and every step in the engagement. That is, from planning, from engagement procedures, everything. Okay, so you have to comply with all those requirements of documentation. So this is your SRS 4400. That is engagement on agreed upon procedures. If no further doubts, what I propose here is let's take a quick 10-minute break. After the break, we'll gather back and we'll continue with SRS 4410. Okay, let's take a quick 10-minute break until the time you try to grasp whatever we have discussed. Thank you. Hello everyone, welcome back. Let's continue the session. I have another draft report, AUP report for you guys, so that you can understand in much more detail. Again, this is a draft dummy report, not the actual report. One of the examples I would say of the draft report you can consider because it contains the minimum items. Just to make you understand how the reports are drafted. So just we'll go through quickly with this report also, this draft report also. So see, this draft report basically here is on the calculation of financial ratios. Now again, they are specifying the engagement letter. This report is issued in accordance with the terms of our engagement letter. Then we have performed the procedures agreed upon with you enumerated in clause 6 with respect to the calculation of following ratios for last 3 years based on the financial information received from you. So these are the ratios that will be calculated, also referred as the original statement. Our engagement was undertaken in accordance with these standards on related service SRS 4400 engagement to perform agreed upon procedures issued by the ICAI. We have obtained the financial information for the last 3 years as mentioned in clause 2 from you, and the financial statement received has been considered final for the purpose of issuing the report. Again, now if you focus on this point, that the financial information for last 3 years was received from you means the person who is appointing us or to whom we are addressing this report, and that has been considered final for the purpose of issuing this report. So no additional procedures have been performed on that. Management responsibility for the statement. Okay, like again, the preparation of the financial statement is the responsibility of management of the company. We are specifying that it's the responsibility of the management. Again, management is responsible for ensuring the requirements of engagement letter are complied with all relevant information necessary to issue the report are provided to us. Okay, so again, management is responsible, not us. Agreed upon procedures. Now, what are agreed upon procedures? Pursuant to the requirement of the engagement letter, our responsibility to perform agreed upon procedures solely to assist you in calculation of the ratios specified in clause 2 based on the last 3 years financial statement for this purpose. For that, we will calculate the ratios mentioned in clause 2. We will calculate the ratios by applying the following formula. Like they have specified the formula like how the ratios will be calculated. Okay, and they will report in annexure 1 of the a specified format is there in the engagement letter. So they will report the calculated ratios in annexure 1. Again, SQC1, because SQC1 will be applicable. So they are saying that they have complied with the SQC1. Results, not the opinion, not the conclusion, outcome or results. You can use the outcome or results, whatever you want. So what they are saying is they have specified in annexure 1 the calculation of the ratios and restriction to use. Very important, that is part of each and every agreed upon procedure report. Like because the above procedure do not constitute either an audit or review, okay, generally accepted auditing standards in India, we do not express any assurance on the financial statement or on the accuracy and completeness of the data used to calculation the ratios specified in clause 2 and annexure 1. Had we performed additional procedures or had we performed an audit or review, other matters might have come to our attention that would have been reported to you. Our report is solely for the purpose set forth in clause 2, read with clause 6 of the report, like with respect to the calculation of ratios, and not to be used for any other purpose to be distributed to any other parties without the permission of the firm. Okay, and accordingly, we do not accept and assume any liability, duty of care for any other purpose or any other person to whom this certificate is shown or into whose end it might come without our prior consent of writing. So, restriction of uses. And then you have the annexure. Calculation of ratios. These are the ratios which are there. Simple. A draft format, you can say, again, which complies with the particular standard SRS for your understanding. This is all dummy data. All dummy. Clear? Clear with this? How the report is issued under SRS 4400? Any doubt? No? Okay. If no doubt, let's proceed and move to the next SRS, that is 4410, compilation engagements. Okay. Now, 4410, compilation engagements. What is that means? Okay. What that compilation engagement includes, basically we need to understand, and how it is different from the agreed upon procedures. Okay. Now, when I talk about compilation engagement, again, when I talk about compilation engagement, here the purpose is to compile the financial information. Okay. The purpose is to compile the financial information, historical financial information. Now, predominantly, management is responsible for presentation and preparation of the financial statements. When it comes to 4410, we are, you can say, kind of helping the management in that. Okay, there is one doubt, which is why the word independent has been used in that report title. See, there is no issue if you use the word independent, but provided you comply with the requirement of the independence. And at the end, you are independent. If that is the scenario, then it is fine. You can use the word. Okay. Okay. So we were at the compilation engagement. Now, as I told you, if you want to understand in a nutshell, in a summary way, what is a compilation engagement? Compilation engagement is an engagement where you assist management in preparation and presentation of financial reporting framework. Simple. You help them compile the financial reporting or financial information, financial statements, but you do not issue any opinion. Are you getting the point? Here, you help management in order to compile and prepare the financial statement, but at the end, you do not issue any opinion. This is the specific standard. Okay, specific means, for example, if we talk about SRS 4400, that is for the agreed upon procedures. Now, agreed upon procedures can be multiple. There can be multiple different type of agreed upon procedures, okay, which will get covered under SRS 4400. So you can say that SRS 4400 is kind of a general standard which covers all agreed upon procedures. But when I talk about SRS 4410, it is a specific standard which covers only compilation engagements. Okay, only compilation engagements, nothing else. So this is more of general standard and this is more of a specific standard. Clear? Now, when I talk about compilation engagement, which is there on your page, that is 9.9. Okay, SRS 4410 is there on your page 9.9. When I talk about compilation engagement, it is the engagement where the practitioner, by using his accounting and financial reporting expertise, assists the management. So the role of the practitioner, now here we will use the term practitioner because auditor cannot compile financial statement. It is the responsibility of the management. That will be a direct conflict. That's why we are using the term practitioner. Again, you can use the term practitioner over there also, perfectly fine. But over there you can use the term auditor also, because some procedures are being performed. Like in the last example, we saw that procedures related to the confirmation, accounts receivable confirmation, which is kind of a audit procedure, but again at the end no assurance is being issued. That's why the general term auditor can be used. Okay, but when you issue the report, make sure you use the term practitioner, or you use the term which is, reflects that there is no assurance involved. Here in 4410, by default, we will be talking about practitioner. We will not come to the auditor term. We will use the term practitioner. Reason because compilation, compiling the financial information, presentation, preparation of the financial statement cannot be with the auditor in any given case. Cannot be. That's why we will use the term practitioner. Now, here the responsibility of the practitioner is to assist management for the presentation and preparation of the historical financial information. Each and every word is important. Means when I say assist management, we are assisting the management, not assuming the responsibility. There is a difference between both. Okay, so one is practitioner, sorry, assuming the responsibility of presentation and preparation of financial statement. Second is practitioner assisting management in presentation and preparation of financial statement. Now, both are different. In this case, management is no longer responsible. Okay, here we are only assisting. Okay, that's why at the end, management is responsible for presentation and preparation of FS. That's why the term assisting is being used, not the any other term. Okay, so we are assisting the management in preparation and presentation of historical financial information. Now, if I have to focus upon the word, I'll focus upon the word historical, not the prospectus or prospective. I'm talking about historical financial information, not the prospective financial information, not the forecast, not any, estimates, nothing. Estimated financial information, no. Forecasted financial information, no. Future financial information, no. Prospective financial information, no. Historical financial information means the data and the transactions which have already been incurred, recorded, transactions which are already there, for that only. And that too without obtaining any assurance on that information. We are not obtaining any assurance on that information. We are not issuing any assurance on that information. Now, why this is the scenario? Why we are saying this? That we are not obtaining any assurance, or like, what is the problem in obtaining the assurance? Let's say, for example, if I say this is an assurance engagement, then like, okay, we are preparing, we are compiling the financial information. Why we can't issue assurance? First, this is the related service. Okay, related service engagement. So by default, we will not issue any assurance. Okay. Number two, compilation or preparation of the summary financial information. Okay, or like, compilation of the financial informations with assurance. Compilation of financial information with assurance, kind of, preparation of the summary financial statement or report on the summary financial statements. So that particular part, report on summary FS, which is prepared based on the audited FS, which includes some form of assurance, is basically covered by SA 810. It is not covered by this particular standard. If I talk about any other information, not the historical information, in that case, assurance engagement to report on the compilation of pro forma financial information. Now that is related to a prospectus is covered by SAE 3420. Again, separate standard, which is an assurance engagement. That's why I'm saying if that is an assurance engagement, that is covered by a separate standard. Are you getting the point? So if I'm talking about an assurance engagement, again, that is a separate standard. Same way for the prospective financial information, you also have a separate standard. Like it's not a historical financial statement. I'm not talking about historical. If I say no, this is let's talk about some different kind of what do you say, financial information, prospective, like future based. Okay, if that is a future based financial information, so over there the examination of prospective FS or financial information is basically covered by SAE 3400. So for different, kind of engagements, whether it is with assurance, then SA 810. If it is pro forma financial information, 3420. If it is prospective financial information, 3400. So separate engagements are covered by the separate standard. When I say historical financial information, only assisting without obtaining any assurance or on the information, on that information, then only it will be covered by SRS 4410. Very, very specific. Clear with this? So that's why each and every word is important when it comes to SRS 4410. Any doubts? Any doubts? Again, as I told you, like, compilation engagement for only historical financial information. Okay. This is done before audit because we are assisting management in preparing the financial statements. We are assisting management in preparing the financial statements. This you can say is before audit. Once the financial statements are prepared, then they are audited. Here, the practitioner has to apply his financial reporting and accounting expertise. That's why he's being hired over here. So, practitioner where applies accounting and financial reporting expertise to assist the management. Everywhere we will use the term assist the management. That's it. We are assisting the management, nothing else. If practitioner assists the auditor, then he will become either other auditor or he may become auditor's expert. then it is covered by SA 600 series that we have discussed. Or you can say assisting the auditor can become part of engagement team also. But here we are assisting the management. Clear? Now, why management can hire us? Or what could be the purpose here for hiring us? Okay. See, the engagement can be performed for different reasons. Like management can prepare financial statement for different reasons. Either they want to comply with the law or regulations like Companies Act. Either they want to prepare for their internal purpose, okay, or for something else, MIS reporting or whatsoever. So in that case, the financial information can be prepared for any of the category, not necessary the annual financial statement or general purpose financial statement. I have not used the term general purpose financial statement. I am only using the term financial statements or financial information. Rather, to be specific, I'm using the term preparation and presentation of financial information with respect to applicable financial reporting framework. Nowhere I have specified whether this is a general purpose financial reporting framework, special purpose financial reporting framework, general purpose financial statements, or special purpose financial statements. It can be anything. So, this financial information can be general purpose or special purpose also. Same way, my financial reporting framework can be general purpose, can be specific purpose. That depends upon for which reason I am preparing the financial information. For example, like if the management is preparing financial information to comply with the mandatory periodic financial reporting requirement established by law, for example, Companies Act, or for purpose unrelated to mandatory financial reporting. For example, let's say management for management of those charged with governance. Okay, kind of MIS. That is MIS reporting that is prepared. Okay, for internal use, such as financial information provided to a funding body for funding startups or project report kind of thing, or for different kind of reasons could be there. Okay, for funding related, for merger and acquisition, or for due diligence. So for any such reason, like yes, banks also, banks, financial institutions, or for even some cases they might be preparing in IFRS for external commercial borrowings. Anything can be there. So I'm not saying that it is only general purpose financial statement based on Ind AS, based on AS. No, can be anything. Okay, so whenever management needs the help of a practitioner in preparing financial information, and the practitioner assist management in preparation and presentation of financial information, okay, as per the applicable financial reporting framework, which can be general, which can be specific, which can be any. In that case, that is SRS 4410 engagement. As I said, it's not an assurance engagement, not at all. SRS is not at all assurance engagement. Means when we are assisting the management, we are not verifying the accuracy and completeness of that information. No, our job is to assist in presentation and preparation of the financial statements. Our job is not to verify the accuracy or completeness of that information. No, or we will not issue an audit opinion, review conclusion on the preparation of financial information. No, no such issue of opinions or conclusions will be there. Only compilation. Now there is a question, can it be an accountant also instead of CA? See, first of all, these are the standards, engagement and quality control standards. These are applicable to charter accountants. Okay, member of institutes. So if you as a member of institute, if you are undertaking any such engagement, then this is applicable to you. I'm not sure which other accountants you are referring to, Jenny, but I'm not sure whether they are member of institutes or not. So if you are a member of institute, this is applicable to you. Then again, objective is to assist the management and to report in accordance with the SRS. When you are going to assist the management, you have to apply your accounting and financial reporting expertise. That's it. Pretty straightforward. There is nothing difficult or nothing, what do you say, complex over here. Now, in order, as I said, this is an engagement. Just like SRS 4400, this is an engagement. If this is an engagement, okay, in that case, you have to comply with the ethical requirements. The way we have seen ethical requirements over there, in the similar way, we have the ethical requirements over there. The way we had the terms of engagement over there, the terms of engagement will be over here also. The way we had minimum requirements with respect to performance and the reporting part, same way we will be having minimum requirements over there, and we will go through that. So first, let's focus on the ethical requirements. Basically, all the code of ethics and the ethical principles will be applicable. So practitioner has to comply with the ethical requirements. But this is not the SR, this is not an assurance engagement, this is an SRS. That's why independence is not mandatory. So independence requirement do not apply. You can still follow, there is no restriction, but it is not mandatory. If you are assisting the management in preparation of a special purpose financial information for a special reason or for special some engagement, something like that, okay, where your independence is required by the law, at that point in time you have to comply with the independence, but otherwise it is not mandatory. Okay. Yes, Mancha. Management expert can be a non-CA, that is fine as per SA 500. That is perfectly allowed under SA 500. Not necessary that each and every management expert should be a chartered accountant. But if you are a member of institute, you are assisting the management, becoming management expert, in that case, you have to comply with this particular standard. Clear? Any doubt? Okay. Now, as I said, similar ethical requirements, nothing different over here. Acceptance and continuance, similar. We will go through quickly. Similar on the same line. One, you have to identify the applicable financial reporting framework. Reason because here, as I said, it could be special purpose framework, it could be general purpose framework. So you have to specify based on which framework you are preparing or presenting the financial information, or rather assisting the management in preparation and presentation of financial information. Okay. Number two, you have to specify the objective and the scope of compilation engagement. As I said, you are compiling the financial information. Now, which portion of financial information, that is important. Which portion of financial information is being compiled by you, or in which portion you are assisting management, how much you are assisting management, the objective and the scope of the engagement, your responsibility as a practitioner. Okay, that is to comply with the ethical requirements. Okay, whatever ethical requirements we have discussed, you have to comply with that. That is your responsibility. Management's responsibility, you have to specify that in your engagement letter, that what is the management's responsibility. Now we are talking about the terms of engagement. Okay, what is the management responsibility? Again, as I said, you are only assisting. That's why the primary responsibility for the presentation and preparation of the financial statement will lie with the management. So the financial information preparation, presentation, accordance with the financial reporting framework, is with the management. Design, implementation, maintenance of internal control, with the management. Accuracy and completeness of the records, management. Judgments in preparation and presentation of financial information, including those for which the practitioner may provide assistance, is of management. Means we are only assisting, management has to make sure, or management is responsible for everything. Primarily, they are responsible. Even though we are assisting them, but at the end, management has to assume, management has to verify, or management has to, apply the judgment before incorporating, accepting, or, before using the information that we are providing. We may provide assistance, but at the end, management will be responsible for that. The expected form and content of the practitioner's report. At times, we might, let's say, for example, we are compiling the engagement. So what we'll do is we'll issue a report, and we will then, in annexure, we will attach the compiled information in the way the management wants. So the expected form and content of the report and the format in which the information will be compiled. And these are the minimum terms that you are required to specify in your engagement letter. If there is a recurring engagement, for example, quarter on quarter, you are required to do compilation, monthly compilation for MIS, something like that, recurring engagement. In that case, before start of each and every recurring engagement, for example, management hired you that every month do or assist us in compiling the financial information. That's a monthly engagement. So every month, before starting the compilation process or before assisting the management, you have to ensure that the terms of engagement are as it is. If they require a change, if there is a revision in terms of engagement, then that is properly, like agreed upon in the form of an engagement letter, and you can still perform the engagement. Clear with this? Any doubt? Any doubt? No? Okay. Now, that was agreeing the terms of engagement. Okay. Once I agree with the terms of engagement, the second step comes to the planning and performing the engagement. Once I have agreed upon the terms, now I have to plan and perform the engagement. How would I perform the engagement? Can anyone tell me? If I have to assist the management in compilation, how will I help? How will I perform that engagement? Anyone? if I have to compile the financial information for management, how will I do that? Basic steps. Understand the entity, operations. Okay, very good, Mansha. What else? Anyone else? Controls, FRF. Okay, communication. Very good. Yes. See, very good, Jimmy. Very good, Mansha. So when I have to perform compilation engagement, the first and the foremost thing I need to do is I need to understand how I need to compile, what information it is, what financial reporting framework it is, and to understand the financial information, I need to understand the entity. Because without understanding the entity, you cannot understand the financial information. Okay. I can give you 10 different numbers, but unless and until you are not clear with the background, you may not understand how to compile. For example, I may say, okay, compile the revenue from operations on a monthly basis based on different segments. Okay, prepare a segment reporting for me. I'm the management. I ask you prepare a segment reporting or assist me in the segment reporting. I can give you 10 different data, 10 different files, information. But what segments are there? Okay, which is a identifiable segment and everything. For that, you need to understand the business. You need to understand which all segments are there. What is the nature of business? Okay, what is the format under which you need to assist me and you need to prepare the segment information? Is there any specific format for the segment information? So understanding the business, entity, its operations, accounting system, data, records, plus the financial reporting framework that is being used is the first step to perform in the performance of the engagement. Okay, so entity's business, understanding the entity's business operations, including entities accounting systems, applicable financial reporting framework, basically how to prepare segment information. If I talk about example of segment information, then when I talk about obtaining the understanding of various segments, information provided by management, okay, format for segment reporting. These are the basic things that I need to understand. Number two, financial information. In this case, for example, it is a segment information that management has to provide us, including your records, judgments, other information, whatever it may be applicable for that. Everything has to be provided by management. Okay. Then what I need to do is I need to discuss with management or those charged with governance, okay, with respect to the judgments that I am taking in preparation and assistance of the segment information or financial information. So if I am taking any significant judgments, I have to discuss that with management or those charged with governance. Then I need to read the particular compiled financial information based on my understanding. Okay, so that if I can identify if there is any issue, if I have done perfect compilation, proper compilation as per the requirement or something like that. So prior completion, I need to read the compiled financial information to understand whether my compilation is appropriate or not. And if, let's say, for example, if there is an error if there is an inaccurate data, if there is some issue. For example, management was supposed to give you segment information. They gave you the bifurcation of revenue, but they did not provided you other information, segmental information. Now, how will you segregate between segments? So management has given you incomplete information, inaccurate. Or for example, management gave you information where you have only two segments, but management is asking you to report between three different segments, something like that. Okay. So for that, for the inaccurate data, incorrect data, incomplete data, incorrect information, you have to report, or you have to, bring attention of the management, and you have to request management for the additional or corrected information. Okay. So what I'll do is I'll ask management, please provide me the corrected information, additional information. You have given me wrong information. If I am unable to complete my engagement because management failed to provide me data, because management is not providing me the data to compile the segment information, I'm using the segment information as an example. Okay. So don't consider that this is only applicable to segment information. No, this is an example that I'm taking or using to make you understand more easily. Let's say management failed to provide you the data. Management is not providing you the data. First of all, this is not an audit engagement where I need to, find alternate audit evidence. No, I'm not going to perform other audit procedures, other alternate procedures to gather sufficient and appropriate audit evidence. No. If management, the responsibility of providing the data is with management. If management is not providing me the data, which is kind of creating a limitation on the scope of engagement, I will inform management. Okay, management, you are not providing me the data. I need this information to complete my engagement. Still, if I'm unable to complete the information because management is not providing the information, records, explanation, whatever I need, I'll withdraw from engagement. And I'll inform management and those are with governance for the reason that this is the reason I'm withdrawing in writing. And because of this, I cannot continue the engagements. Clear? Any doubt till now? Any doubt? Yes, SQC1 is applicable. Because if you read the title of SQC1, what it says, it is, if you see, it says that it's a quality control standard. Okay. SQC1 is a quality control standard for all the engagements. Means quality control for firms that performs audit, review of historical financial information, other assurance engagements, and related service engagements. It covers every kind of engagement. That's why it's applicable to SRS 4400, 4410 both. This is a report, not a certificate. Any doubt? Any doubt till now? Any doubt? Okay. No, Mancha. As of now, SQMs are not applicable. Once it will be, you will be, made aware through a notification. But as of now, it is not applicable. Any other doubts? Okay. If no doubts, let's proceed. So can you have the example of the same available with you? Example of what? The report, compilation engagement. Usually, see, these kind of engagements and are not public. The data or the reports are not publicly available, and these are very. Let's say, for example, SRS 4400. It can cover multiple type of engagement, so we can have a draft or dummy available ready for with us. But when I talk about SRS 4410, it is very specific, very specific. I am to even to have a draft, a lot of you can say your dummy information is required. I will try to prepare one for you guys. In next lecture, I will be able to show you one draft SRS 4410 that report. But again, that will be totally you can say dummy draft one, and it will be based on the dummy data, because this is very specific engagement, very specific. No, these are not due diligence, because see, due diligence again involves a lot of, a kind of uh, investigation, or due diligence will involve a lot of kind of, you do a deep digging in due diligence. But when I talk about agreed upon procedures or compilation, you may not perform that kind of, digging or that kind of validation that we perform in due diligence. When we will come to the due diligence chapter, okay, there is one topic on the due diligence. We will discuss different type of due diligence and what is due diligence. Due diligence is way more detailed when it comes to the agreed upon procedures or these kind of compilation engagements. So I will not call these as a due diligence. No, this is very shallow, I will say, when it comes to the agreed upon procedures, because at the end you are not issuing any assurance or any kind of opinion. So due diligence is far more detailed, I would say. Kind of mancha, yes. That's why I say agreed upon procedures. So procedures which are agreed, you need to perform. That's it. Okay. So let's say, for example, when you are performing compilation engagements, you identify something is wrong. Okay. Or for example, management is asking, okay, do a compilation, but that compilation or that information is not as per the format. Let's say, for example, hypothetically understanding segment reporting. Okay. Management asks you to prepare segment reporting in a particular format, but that is not feasible, or the data that you have is not that much detail for you to prepare that much detailed segment reporting. In that case, you will ask management to provide you either additional data, or you may ask the management to change the format for which you are preparing your segment reporting. Okay, that is the first scenario. Second scenario, you identify misstatement in segment information. Just a minute. Just give me a minute. I think there is some system issue. Just a minute. Okay. So I was talking about segment information. Okay. Example. So let's say when you were preparing segment information, you identified some misstatement. Misstatement, for example, the total of all the revenue, segmental revenues, is not matching with the total revenue. There is something missing. Or allocation of the fixed asset to each and every segment is not done appropriately, that the total is not matching, okay, or the segmental balance sheet is not telling up to zero, whatever, like, you identified there is an error, there is a misstatement. In that case, you will inform that misstatement or ask management to amend them. So there is perfectly, fine if you identify a misstatement. Yes, there could be a misstatement when you are doing a compilation of financial information. Okay, you may identify a misstatement. At that time, you need to inform management that management there is a misstatement. If the compilation of financial information is misleading, okay, for example, the allocation which is done by the management, segmental allocation, is incorrect. For example, management has allocated segmental information in 4 different segments and provided you information for the 4 different segments. But in actual, management has only 2 segments. The rest of the 2 are incorrect, or management is trying to mislead. At that point in time, also you have to inform management. Management, this is misleading. You don't have this segment, but allocating revenue and all that stuff to this segment will be misleading. So please amend whatever information that you want me to compile, or the way you want me to compile. So at that point in time, you have to ask management to make amendments. So there are 3 scenarios where you can ask management to make amendment. Number 1, compiled financial information does not adequately refer to the financial reporting framework. That is, segment information or the information you have is not as per the format under which management requires you to report. Format is not matching. Number 2, you have identified misstatement, totaling total revenue with the segmental total revenue not matching. Number 3, misleading information that is being asked by the management for to compile. In that case, these 3 scenarios, you will ask management to amend the financial information. So financial information does not adequately refer to describe applicable financial reporting framework. Format part, so I'll write it over here. For example, format. Second, compiled financial information is materially misstated, total not matching. Example, total of segment revenue versus total revenue. And third, misleading. Okay, so the information is misleading, means additional segments which are not there. In that case, ask management to make amendments. If management declines, does not permit you to make amendments, if management does not allow you to make such amendments, simple, withdraw. Okay. So if management does not permit, or if they do not agree, then in that case, reasons, you need to withdraw from the engagements by providing the reasons that why we are withdrawing. If withdrawal is not permissible, then you need to seek what is your legal responsibility. Okay. And you need to obtain an acknowledgement from management or those charged with governance that they have taken responsibility of the final version. Means they are responsible for the final version of the financial information, compiled financial information. You are only assisting them. So obtain acknowledgement from management that they have taken responsibility of the final version of compiled financial information. This is similar to your management representation. Can practitioner make proposed amendments? If allowed by the management, then yes, because the final responsibility lies with the management. So if management is ready to make such proposed amendments, then yes. Or let's say, for example, in your report, you can, provide amended compiled financial information, but management is not using that. Management is not ready to, agree to your draft report that you have presented to management. So there could be a, dispute. And throughout the particular engagement, you have to maintain the documentation part. Now, very, very, very important part, that is the report. Okay. See, here our responsibility is to assist management. That's why our report should not be, okay, a kind of a report where we are issuing an opinion or conclusion on financial information in any way. That's why when we are drafting our report, we have to be careful. We have to, make sure that we use the terminology, the words, the, appropriate descriptions, so that we can convey this is not an assurance report. Just like we did in SRS 4400, in the similar way, we will do it here. Okay. So let's see what is the basic minimum requirement of the report. So these are the minimum requirements that we are discussing now. Minimum requirements of reporting. Okay. Number one, title. The way we saw a title earlier, similar. Addressee, that is required by the terms of engagement. Basically, in this kind of engagement, it is the management only, because management is the one who is hiring you and to whom you are assisting. A statement that the practitioner has compiled the financial information based on the information provided by the management. Means information was provided by management. Description of the responsibility of the management that we have already seen in the engagement letter. Identification of applicable financial reporting framework. And if a special purpose financial reporting framework is used, a description or reference to that special purpose framework. Then identification of financial information, or let's say you are preparing multiple financial informations, then title of each element. For example, if you are compiling segment information, you are compiling information related to some employee benefits, something like that. Then title of each of the financial information and the period to which it relates. Date of financial information or the period. Let's say segment reporting, segment balance sheet as at 31st March. So the date of the financial information. Let's say you are preparing segmental profit and loss accounts. Then the period that is covered by the segmental profit and loss accounts. Practitioner's responsibility, that you are complied with the SRS and other ethical requirements, except for the independence. A description that the engagement is in accordance with the SRS 4410. And then explanations. That is, this is not an assurance engagement. No. So that's why we are not here to verify the accuracy and completeness of the financial information. Okay. And second, this is not an audit opinion or a review or a conclusion. Okay. So practitioner does not express an audit opinion, review, or conclusion on financial information. You have to specify these things. These are the minimum requirements. If a special purpose financial framework is used for compilation of financial information, then you have to describe the purpose for which the financial information is prepared. For example, funding, bank, MIS, whatever it is. So you need to describe the purpose and you need to draw attention to that special purpose framework. I'll show you the examples which are there with the standard itself. So we'll go through those examples which are there in the standard for the report. Okay, but that might not cover the what do you say, compiled financial information. You will only have the compilation report. So I will go through that compilation report. There are 4 examples or illustrations which are already given. Then the date, practitioner signatures, and the place. This is the minimum requirement of the reporting. Any doubt with respect to this? Any doubt? Can also inform statutory auditor uh, when you would like to inform statutory auditor. Can you explain a bit more on that? Any doubt, guys? Any doubt? Okay. If no doubts about the misstatement and when he withdraw from the engagement. No. See, again, the terms comes about the confidentiality. Were you supposed to inform statutory auditor? Was it a legal responsibility, legal requirement, or your a statutory responsibility to inform statutory auditor? If no, then it might be counted as a breach of confidentiality. See, at the end, you are assisting the management. So the responsibilities with respect to the engagement is only restricted to the assisting the management. You may choose to inform management when you are withdrawing from the engagement. You may communicate those charts with governance. That is fine because they are also part of the company. But anyone who is independent of the company, other than the those charts with governance and management, may result in breach of confidentiality. So you have to be very careful to whom you are reporting and what information. I hope I'm clear. See, whether, let's say, for example, let's understand with example. Management hired and management expert to prepare employee benefit schedule. Okay, as per the our general purpose financial statement. So whatever employee benefit related schedules are there in financial statement, management hired a particular expert. Now that expert withdrew from his engagement. He decided to resign, and he said management, okay, I'll not prepare. You prepare because you are not given me data. In that case, have you seen anywhere that management expert reporting to the auditor that I'm withdrawing from my engagement? Here, the only difference is management expert is a chartered accountant and the member of institute. So, in that case, let's say, okay, for example, even though if management expert wants to inform auditor that I'm withdrawing from the engagement, that is the between management and the management expert, not anything related to the auditor. Why auditor will be bothered whether management expert is preparing or is preparing? Ultimately, the responsibilities lies with the management. Management has to prepare. They will prepare. They will give it to auditor for auditing. Now, whether management has taken assistance from anyone or they have prepared doesn't make any difference. Are you getting the point? I hope I have answered your question. Okay. Now let's discuss the account compilation reports example which are given in the standard itself. Okay. So this is the standard itself, SRS 4410. In the standards annexure, you will be able to find the illustrations. Okay. There are 4 illustrations given with respect to the compilation report. Uh, so let's go through these illustrations. So illustration number 1, that is a practitioner's report for an engagement to compile financial statement using general purpose financial framework. So this is general purpose. Okay. In group audit, this liabilities there will discuss. I will discuss on the group audit when we will discuss the group audit chapter. So don't worry on that. So this is the report. Now to the management of ABC company, as I told you, most of the time the addressee will be management. We have compiled the accompanying financial statement of ABC based on the information you have provided. Again, information you provided. The financial statement comprises the balance sheet as at March because the date because of the balance sheet, the statement of profit and loss account, cash flow statement for the year ended, period because it is related to a period, and summary of significant accounting policies, other explanatory information. So you have seen till now title of each financial information plus date / period. We have performed this compilation engagement in accordance with the standards on SRS. Okay, SRS standard. So reference to SRS is also there. Then we have applied our expertise in accounting and financial reporting to assist you in the preparation and presentation of these financial statements in accordance with the accounting principles generally accepted in India. We have complied with the ethical requirements. So this is practitioner's responsibility. Then these financial statements and the accuracy and completeness of information used to comply them are your responsibility, management's responsibility. We are talking about management's responsibility. Since a compilation engagement is not an assurance engagement, we are not required to verify accuracy, completeness of the information you provided to us to compile these financial statements. Accordingly, we do not express an audit opinion or a review conclusion whether these financial statements are prepared in accordance with the generally accepted principles in India. So you can say kind of limitations or exceptions. And then you have this particular date, sign, place. So this was your illustration number 1. If I talk about special purpose framework, so we have one more illustration. See, this one is with respect to modified general purpose financial reporting framework. Okay. So framework adopted by management on modified basis. So this is with respect to financial reporting framework, accounting principles generally accepted in India, excluding the treatment of current investment, which has been valued at fair value rather than being carried at lower of cost or fair value. Okay. So everything will remain same over here except for, see, as stated in note X, the financial statement are prepared and presented in accordance with the accounting principles generally accepted in India, excluding current investment which have been valued at a fair value rather than carried at the lower of cost or fair value. Okay, these financial statements are prepared for the purpose described in note Y to the financial statements. Accordingly, these financial statements may not be suitable for other purpose. So this is an additional paragraph that we add when there is a modified or special purpose framework. Remember, for special purpose framework, we have to specify the purpose and the description. So if I go back to chapter, if you see this one, if it is a special purpose framework, you have to describe the purpose and you need to draw attention of the readers to the fact. Okay. Now here, and this is not suitable for other purpose, may not be suitable for other purpose. So this attention has been drawn over here. Over here, you have a purpose and the attention, both specified in this paragraph. Conclusions means when I say review conclusions, it can be limited assurance. That's why. So limited review conclusions kind of. We will see limited assurance when we will discuss in that chapter. So this was with respect to special purpose framework. Another illustration is there with respect to when your engagement to compile financial statement using basis of accounting specified in a contract. Means this is not the special purpose, this is not the general purpose financial statement. This is some financial statement based on a contract. Okay. This is intended only for the parties specified in the contract. And distribution is restricted. So here, when you will prepare the report for these kind of compilation engagement, you specify this, that as stated in note X, the financial statement are prepared and presented on the basis described in the clause Z of the provisions of the company's contract with XYZ Limited, dated this, and for the purpose described in note Y of the financial statements. Accordingly, these financial statements are intended for use by the parties specified in the contract and may not be suitable for other purpose. So this is the way you need to describe it when it is for the specific purpose. Any doubt? Any doubt till now? Any doubt till now? See, you are required to have basic understanding of these standards, okay, these SRS, and accordingly, the questions will be there in exam. Whether UDIN is mandatory for all type of reports including SRS. Okay. See, UDIN is mandatory for all audit assurance and attestation functions rendered by full-time practicing chartered accountant. Now, what is audit assurance and other attestation services? Now, when the the definition, if you see the definition of audit assurance and other attestation services, it includes that engagement as per the standards on auditing, engagement as per the review engagements, that is standards on review engagements, other assurance engagements as per the standards on assurance engagements, SAEs, SREs, SAs, and guidance notes. And also it includes engagement as per the standards on related services, that is SRS. So if there is a report issued under SRS, yes, for that UDIN is required. Any further doubts? Even for the compilation one, UDIN is required. Okay. If no further doubts, what you guys needs to do? Okay. Number one, you have questions below at the end of this particular chapter. Test your knowledge. Please try to solve these questions by your own. First, solve these questions by your own, and then you go to the answers. Number two, you can refer to mock test papers, you can refer to RTPs, you can refer to suggested answers of previous exams, previous attempts, to understand how the questions are there. I will also take up in the next lecture some questions on this topic. Okay, considering the time now, I will be taking up some questions so that you can get an understanding how we need to answer the question and what type of questions will be there. But beyond that, you have to practice further on the questions for this particular chapter. After today, you need to go through the chapter in detail, have a reading, that is must. And if you need any further understanding, you can ask doubts in the next lecture. Perfectly fine, I will be there to answer it. Plus you can go through the standards also, the bare text of the standard. Trust me, I'm not sure how many of you go through the bare text, but the bare text is also available for the standard, okay, which can help you to understand further. So these are also available on the ICAI portal, okay, website, where you can go through these bare text also to understand further. But I would suggest go through the chapter number 9. Okay, this is pretty much detailed one. If you have doubts, ask me in your next lecture. Perfectly fine, you can ask. Try to solve questions as much as you can, and I will also take up some questions on this particular topic in the next lecture. Okay, and then we will start the next chapter, so that you can get an understanding of how to write the answer for this chapter. Okay, if no further doubts, then guys, before next lecture, please read the chapter number 10 also. We are done with the chapter number 9. Chapter number 9 contains only these two standards that we have covered in detail. SRS 4400, SRS 4410, that has been covered. So before start of the next lecture, please also refer to the chapter number 10. Okay, and you can ask chapter any doubt with respect to chapter number 9, 8, 7, whatever it is there in past, you can ask any doubt. Okay, if no further doubts now, then I propose to close the session here. I'll keep it till here, and then in the next lecture I will continue with the questions and chapter number 10. Okay, so if no doubts, then thank you guys, thank you for participating in today's session. Happy New Year, and I'll see you in the next session.
Thank you, sir. Happy New Year, sir.
Thank you. Yes.